In this video, I'll be sharing with you an extremely profitable scalping system that works for Forex, stocks and crypto. So make sure you listen up as you do not want to miss a thing. So first, I load up TradingView, and for this system, I'm going to be using NAS 100, but you can pick any pair that you'd like to use. So let's head on over to the indicators tab, and for this strategy, we're going to be needing 3 indicators. And for the first indicator, search the market bias. Now let's make some adjustments to the settings. We're going to change the periods to 200. And leave the rest of the settings the same. Now we're going to be using the market bias to determine the direction of the trends. When the market bias is coloured in green, we're in a bullish structural market, and when it's coloured in red, we're in a sell structural market. Now, in addition to this, it doesn't matter if price is below the market bias, we're still going to be in a bullish structural market until the market bias turns red. And vice versa for sells. If price is above the red market bias, we're still looking for sells because this is signifying to us that price is oversold. So now we need another 2 indicators. So let's go to the indicators tab. And for the second one, we're going to need the Z-score probability indicator, the exact same as yesterday's video. Now we need to make some adjustments to this in the settings. It says double click on the indicator. We're going to go to style and scroll right down to the bottom, and we're going to uncheck the bottom 4 boxes. And we're going to be using this indicator the exact same as yesterday. We're going to be using it to confirm the trend direction this time, as this indicator is very similar to the RSI, as it identifies oversold and overbought conditions. As we can see here, price was oversold by the red cloud, breaking and closing past the red bottom channel. And when it's overbought, you'll see the green clouds breaking above the red top channel. So now we need the final indicator. So let's go to the indicators tab. And for the final indicator, we're going to need the twin range filter. Let's make some adjustments in the settings to this. Change the fast period to 50, the slow period to 35, and the slow range to 3. So in this strategy, we're going to be using this to identify our entry signals, and it's going to print a long green label when it's time to enter a long position, and it's going to print a red sell label when it's time to enter a short position. Now, I'm sure many of you guys watched yesterday's video, and I've decided to improve that system yesterday by at least double. Okay, so this is your entry criteria when looking for long positions. First, we need to make sure that the market bias is colored green, signifying we're in a bullish structural market. And secondly, we're going to wait for price to pull back to the market bias, and either one of these 2 scenarios will play out. Scenario 1 is that price will pull back to the market bias perfectly before continuing up, and scenario 2 sort of works like a stop hunt. Price will pull back and break below the market bias, stopping everyone out for continuing up. As we can see here in this scenario, prices pull back to the market bias perfectly, and in this scenario it's broke out of it before continuing. So once either 2 of the scenarios have played out, we're going to wait for the confirmation that price is oversold by using the Z-score probability indicator, and it must have a red cloud that breaks below the bottom red channel. Now once these 2 confirmations have been met, we're going to wait for our entry signal, which is the twin range filter, printing a green long entry. Now once this happens, we can take the instant execution, and for your stop loss, you can pick out of either 2 options. Option 1 will be directly below the swing low, and option 2 will be directly below the most recent price action, and this is our price action. Okay, and in this scenario, considering that price is pretty close to the swing low, I'm going to decide to put it directly below the most recent structure. So we can take the instant execution, stop loss at a 1 to 5, and for your trade management, we're going to let the trade run to either stop loss or take profit. Okay, so we finally hit it. We had to be extremely patient, but considering we're going for a 1 to 5, at least we got a good reward out of it. So let's go and take a look at the short criteria. So this is your entry criteria when looking for short positions. First, we need to make sure that the market bias is colored in red, signifying we're in a sell structural market. And then we're going to wait for price action to give us one of the 2 scenarios. Scenario 1, it'll pull back to the market bias before rejecting and continuing the sell structural market. And scenario 2 will work as a stop hunt, stopping everyone out before continuing the sell structural market. And as you can see here, we had the scenario that stops everyone out before continuing. So once either one of the scenarios play out, we're going to wait for our confirmation indicator, which is the Z-score probability indicator, becoming overbought. And we identify this by the green cloud breaking and closing above the top red channel. Now, once these confirmations have been met, we can take the instant execution on the next short signal that appears. As we can see here, this was our next short signal, and for your stop loss, you can either put it directly above the swing high or above the most recent price action. But considering this is a large stop loss, I'm actually going to find roughly a middle ground, so probably around just above the short label, and I'm going to go for a 1 to 5 risk to reward. So now I'm going to go and backtest this 100 times and come back to you with the results. So in 7.5 months, I took 100 trades, 54 won and 46 lost, which means we had a win rate of 54%, which when going for a 1 to 5 risk to reward is better than nearly every system that we've had on this channel when targeting a much lower risk to reward. For example, we've had a 57% win rate strategy and we were going for a 1.5 risk to reward. Now, the max drawdown was 6% and the max gain was 20%. So we've had over a 3x on the max gain versus max drawdown, which means this strategy is checking out on every single metric, and we've drastically improved it comparing to yesterday's system just by adding some price action and an extra directional indicator. So last but not least, the net profit was 236% in 7.5 months. So I hope you guys have enjoyed this strategy. Let me know your thoughts down in the comment section below and let me know what pairs you decide to trade this on. And like always, thank you for watching.